So this isn't a service where you have to be on your computer 8 hours a day checking for a trade that's going to come in at 10:03 a.m. And if you don't buy it right then and there, the opportunity's gone and we're going to exit, in 3 hours or the next day.
None of that. This is what you would call, so that's day trading. What you're describing there, that's day trading where your holding period is a day or less usually with day trading. This is swing trading. So it's sort of like medium-term investing. Yeah. It's not short-term. It's not long-term. It's like right in the middle. We'll hold our positions for as little as a week, as long as a few months. I've definitely there's been one or two that we've had on for like 4 or 5 months. I'm looking at one in 2022. We opened it in August. We closed it in December. But it kept going up, so we closed it for an 80% gain. Right. So as long as the indicators that the machine looks for are still showing that this stock deserves to be in the buy category, then we're going to keep it in the portfolio. As soon as it flips and says nope, this is a sell trigger, then we cut it out. And we got a sell trigger on that one on the 19th of December, and we sold it and we took an 80% profit on it. After holding it for 138 days.
Yeah. Welcome to the Angel Research Podcast. My name is 𝗧𝗶𝗺𝗀𝘀𝘁. I'm here with Jason Williams, and we have a very special edition of the podcast today.
Very special.
We're going to talk about AI.
Yeah.
And specifically AI trading. What is going on? Is it this new thing that it's going to kill financial advisors? What's your take on the whole AI? Not even just investing wise, but just AI in general.
Well, I mean, I'm one of those people that's kind of excited about it. Everybody, I don't know, I shouldn't say everybody, use these absolutes, but a lot of people seem to be really concerned, like, oh, AI is going to end the world, it's going to take all the jobs. I don't know. I mean, I'll tell you, like, it's made me better at my job, if anything, and I think that's really the concern there is it's going to take, it's not that AI is going to take jobs, it's people that are utilizing AI are going to take your job if you're not using it too. But, it's not like that new, but at the same time, I feel like we're sort of at that, like, that sort of advent, like where when the internet stopped being just, text on a screen,
right.
When you stopped having to dial into your local library to access it and stuff like that, when you got to like have pictures and things. And, I think that's sort of like where we are at AI. And that's why I'm really excited because when I was too young to invest in the internet technically, in the early days of it, like the very, very early days. But, here I am and I'm in the midst of this AI thing and, I'm really excited about it. I think it's going to be really cool. I think it's going to help move society forward, The cool thing about it is just the machines are able to do things a lot quicker than we are.
Oh, yeah.
They can only do what we program them to do right now. I mean, maybe eventually they'll be able to program themselves, and like that's, where some people get into the scary stuff, like the Matrix things.
Right.
Excuse me, where the machines take over. But, no, I mean, like it just, AI basically does what a person can do, but way faster. It takes just reams and reams and reams of data and analyzes it in like a millisecond and then can basically make predictions from that. Or, now we're working with the generative stuff where it's actually like generating new content and things.
Yeah, I mean, I think it's pretty cool in general. There's obviously far-reaching implications across many different spectrums. So we've been taking it from a couple of different angles here, just what industries are going to be aided by AI and what industries might be just done for now that AI. I mean, recently it was Chegg came out and said, hey, basically 40% of our, or the stock dropped 40% after they said, hey, people are just using ChatGPT now instead of our services. I'm not really familiar. I guess people were using that to sort of like cheat on their homework and like
sort of.
tests,
I mean, because Chegg sort of offers like those tutoring services. And like ChatGPT and other sort of AI, generative AI stuff like that can be a good resource for studying, asking questions and things like that. Hey, help me wrap my head around this math formula, help me understand why, this historical event led to, these things happening and stuff like that. But it's like I said, it's one of those things where, you adapt or you adapt or die, really, like evolve or die. And Chegg has been working with AI companies to basically release Chegg GPT, so that like they can compete and they can offer sort of the same thing that, that people have been sort of stepping around them to use.
Yeah, there seems to be this idea now that if a company, and it was like this a couple of years ago with the blockchain, it's just there was the Long Island iced tea company, and they were like, yeah, we're not called Long Island Blockchain, we're going to do it. And like, so all these companies are coming out and be like, yeah, we're XYZ AI, because they just want to capitalize on the wave that's coming in.
Some of those blank check companies too that are, trying to merge with something AI or something AI generated or something with AI in the name.
Yeah, so I do think if people can plainly see that this is going to be a transformative technology out there, but in many instances, I feel like it's sort of gotten ahead of itself. I think there's more content out there about what AI is and talking about AI than the actual products being implemented yet. So there's a lot of things that are getting ahead of itself. One of the things that came out a couple of months ago, which we've talked about, is this headline that ChatGPT can pick stocks better than your average fund manager or money manager, which, to be honest, I think most monkeys can throw darts and pick stocks better than your average money manager. So to me, I wasn't really impressed with that, but I did decide to sort of dive in to see exactly what they were talking about here. And essentially, all these guys are doing is they're basically telling the ChatGPT, I want you to look at these particular indicators, and there's different plugins and things you can do now to get up-to-date data, because that was the other thing is it's like, it's only on data from up to 2021, right? So you want in investing, you need up to this minute data, right? It changes like that. If you were to ask it an investment strategy and you're only looking at stock data and stocks up through 2021, some stocks aren't even around anymore and all that. So
you look at the high frequency trading firms, they pay, billions and billions of dollars, not to get their offices next to the exchanges, but to get their servers next to the exchanges. Right. Hundreds of billions of dollars just to plop a couple computers close to the exchange.
That split second.
Because that millisecond, of being right next to the exchange in Manhattan as opposed to being across the river in Jersey City. Like that gives you that advantage. And when you're a high frequency trader and you're really, trading that quickly and that many times over, that millisecond really makes a difference.
Makes a difference to get first in line.
Yeah. So if you're analyzing stuff with 2021's data, I mean, you may as well just quit.
So now there is stuff they can get up to date data. You can feed it in the stuff, which is fine. But essentially, all they're doing is using, like you said, using ChatGPT to do better technical analysis. And you still have to pick the different parameters. You still have to do that. So you have to know somewhat about technical analysis, and then you have to pick the correct ones, which there's always debate on what's
and there's just
oversold RSI, that kind of things that you can look at. So
and should you use the RSI or should you use the stochastic indicator? Do you pay attention to the Bollinger Bands or just the moving averages? Which moving average? Do you want the short term, the medium term, the long term? Which short term one? 20-day, 50-day?
Right. So it's not as simple as, hey, ChatGPT, make me $1 million in the stock market.
Yeah.
There's but these media people that put the articles out there, they're just looking for a headline. So it's like, hey, and also I think it was about an 8-week period that they looked at. Yeah. And so, as we know in the markets, I mean, and it was like it beat it by like 0.3%, like a human by 0.3%. So we're like, look, I mean, anybody for an 8-week period, everybody, you can take anybody out there that's going to be able to beat Warren Buffett over an 8-week period. It's a matter of consistency and can it be looked at in up-down markets? How does it react to certain things like that? So, and it got me thinking about your product that you've been running for
it's a couple years now.
Couple years,
yeah,
right?
Yeah, a few years now.
And what was most impressive is the fact that last year, 2022, it was a rough year in the market.
Really rough.
It was rough.
Uh-huh.
So, which everybody knows, and everybody's hoping that sort of the tide has turned now. But the impressive thing about, which is realistic about your product, is it didn't lose that much money, I guess, is what you would say.
I'd be
so you
lying
have
if I
have
said
these
that,
stats that you can bring up, though.
Yeah, I can. And so I pulled these up just for today. So last year we had a 3% loss. But this is the thing. We were invested the entire year. We never pulled all of the money out of the market. We were constantly, putting money, like rolling one trade to the next, closing out losers, taking gains on winners. And so while the markets were down, anywhere from like 15 to 30%, depending on which index you're looking at, we did a 3% loss. And, granted, you would have been better just by not investing at all, but you missed that potential upside. So if you decided, hey, let me just pull all of my money out, well, then you missed everything that happened in 2023.
Oh, yeah. And no one, we talk about timing the market and all this kind of stuff is, if you're still investing and also, maybe invested in some dividend payers where maybe, the stock went down, but you were able to still collect some income during that time. Mm-hmm. That's a possibility. So I think everybody's sort of in agreement is that, you need to be in the market.
Yeah,
if you're trying to time these big market, because it's not like it was exactly, although I guess it was pretty much the top was the December 2021 around in the market.
It might have even been it literally might have even been like the 2nd or 3rd of January, like the first trading day of the year, and that peaked, and then
I think the bottom ended up being sometime in October, November,
like mid-October.
But then we've been up and down since then, so it looks like we've kind of maybe are ready for another leg up, but. Timing these things is very, very difficult.
It really is. And I mean, that's one of the great things with, like you mentioned, this like trading service has to do with artificial intelligence. And so the ChatGPT, like picking my stocks, like the headline, it's catching people's eyes because ChatGPT is relatively new, but AI picking stocks is not new at all.
That's what I was going to say. So, I mean, let's talk about exactly what people mean by AI, right? Because usually what they mean is machine learning and data models, which are essentially what you've been working with for years now.
Yeah.
And we talked about, more of I wouldn't say he's little known, but he's less known than guys like Warren Buffett, which is Jim Simons, who's the founder of Renaissance Technologies. And he's basically like 3x'd like Warren Buffett, at least over the past 20 years. And I think the only reason he's not richer than Warren Buffett is because I think he didn't start trading until he was 30 or something, whereas like Buffett started when he was 18
right.
earlier when he was a kid. So Buffett has a 10-year head start on it. Basically, if you were to compound at the same time frame as Buffett, like he's way ahead of Buffett.
Yeah.
And he sort of pioneered this whole machine learning, algorithm quant sort of trading, sometimes called.
Quant trading, high frequency trading, computer aided trading.
Right.
And I mean, you look at for the past few years, there have been a lot of different services that came out like Betterment and things like that, where it's like you sort of tell a computer program what your goals are, what your risk levels are, and then that computer program sort of like picks investments for you. And that's basically the same thing. That's the same thing that those people were doing when they're generating these prompts for ChatGPT and telling it to pick stocks for them.
One of the things that I really like about this style of investing and service is that it really does take the emotion out of it, right?
It does. And I will tell you, at first it was difficult for me to let the program, I call it the machine, alpha profit machine, but for me to let the machine like take the wheel, basically. I mean, it's like you've grown up driving the car for yourself. You've grown up driving the car for yourself, and now all of a sudden, you're just sort of sitting back and like watching as the wheel turns on its own. And it's put up some stuff that I'm like, man, that seems kind of crazy, but we'll go ahead and we'll put it in there. We'll add it to the portfolio. We'll see what happens, and we get these gains. There was a stock. It sticks out in my head. It's a company called 𝗧𝗶𝗺𝗀𝘀. And it had just gotten hit with this huge short report. Apparently, I mean, it's a Colombian company, like Colombia, the country. They make glass. They ship it all over the Caribbean. A lot of the new big buildings in Miami, the windows are all made out of like their glass. And so they have this cost advantage by being in Colombia. The labor is cheaper, the materials are cheaper, and then also, they're right there. So it's really easy to reach major markets in the U.S. just by shipping this stuff right across the Caribbean. So anyway, this short report came out, basically connecting the company and like the main investors and founders of the company to like Colombian drug cartels and stuff. And it's like, I just, I don't want to like make it sound like I'm trashing Colombia or anything, but that's like the 6 degrees of Kevin Bacon here in the U.S. Like you and I are like 6 degrees away from Kevin Bacon. And like everybody in Colombia is 6 degrees away from a drug cartel.
Right.
So it was one of those things where it was just sort of a hit piece, like, but it came out and it just crushed the stock. And that week, the machine picked 𝗧𝗶𝗺𝗀𝘀.
Right.
And I was like, oh man, I don't know if this is all over, but it meets all of the right criteria. It's gone through, and like checked all of the indicators, and this is. And it's looking at a big universe of stocks. We're talking about thousands of stocks, and it's literally ranking this one up in the top 10.
Right.
And I was like, well, I gotta,
trust the AI.
Yeah, I always say a strategy's worthless if you don't stick to it. And so I trusted the AI, and we closed that one out for a pretty big win. I think it's actually in my 2020 portfolio here. Let me see if I can find it. 𝗧𝗶𝗺𝗀𝘀 we took. It wasn't a huge win. It was on for about a month, and we got 5.5% out of it.
And so that's what we were talking about earlier with the idea of these are fairly quick trades, right?
If you look
these
back,
aren't necessarily, which is even more sort of impressive for last year because you look at eventually, if you buy a good company, eventually you hold it for a period of time, and it, if it's a good company, it eventually goes up. I mean, the trend is always up. However, that might take several years, right?
And so sort of the longer you hold on to it, the better shot you have of being right.
Yeah, and so I've looked at there's stocks in your wealth advisory portfolio that are up 500, 600%, and that's great. But there's a time frame on there of 5-6 years a lot of times.
Yeah.
So this is sort of a different strategy where
Completely
we talk
different.
about the difference between an annualized gain. Do you want to explain the difference between what you would call an annualized gain versus just a regular gain?
Sure. So you can annualize gains one of two ways, right? You can either take a short-term gain and figure out what it would have been if it was a longer gain, or you take a long-term gain and figure out what it was per year, right? So basically what you're doing is you're taking, how many periods of that gain you can get in 1 year. And so for the Alpha Profit machine, our average holding period for 2022 was 59 days, so just under 2 months, right? So what you're looking at there is you take that and you're like, there's 2 months, so there's 6 of those periods per year. So basically you're saying that, your average gain, you multiply that by 6, and that tells you what your annualized gain is in this case. So this year, our average holding period's been about 50 days, so a little bit smaller. And so our closed trades have averaged a 5% gain, but if you annualize that, because we're able to repeat that over and over and over,
right,
you're looking at like a 33% gain over the course of the year, right?
Right. So, to make things simple, there's a big difference between getting, buying a stock and holding it for the entire year and it going up 5%. Because meanwhile, you can't, unless you're trading on margin or doing these like funky stuff, you can't use that money while it's invested.
You have opportunity
right?
cost there.
Yeah. Whereas if you were to invest in that same stock and you only hold it for a month or two and you make 5%, now you have 5% gain that you can then roll into. And to be clear, we're not saying that these are all successive, you're only holding one stock at a time, but a lot of them are, you can roll your profits into the next trade.
And that's definitely, you know, the plan that we have with our model portfolio. So we'll never have more than 10 stocks in the model portfolio. Sometimes if the machine's feeling really bearish, it might cut us down to like 5 or 6 stocks.
Right.
I've never seen the model portfolio empty though, no matter how bad the market's gotten, because it's one of those things where there's, you know, there's always a place to make money. Like there's always a market where you can get gains, and you just have to find it. And this thing just has an uncanny knack for it. And like you said, you know, we don't want to get it twisted and say like, oh, this is always winning and like we're always closing out winners, and we're not. You know, we close out losers too, but you know, the goal, basically, like the sign of a good trader is big wins, small wins, and small losses. You never let your losses get big. That's, you know, how you become a successful trader, and basically being successful more of the time than being unsuccessful. You know, so you're always going to get some wrong, and we do too. You know, let me see. I've got a little stat here. Our winning months from 2007 through the end of 2021, it was about 65% of the months were winning months. But that means that like 35% of the months were losing months. But because we're winning more often than we're losing,
60%,
we're coming out ahead.
You're doing it. Yeah, absolutely. And that's what I think people have a hard time understanding is you see some of these gurus out there like, I've never had a losing trade. You know, all of my trade is just like bullshit. You know what I mean? Anybody who's followed the market and has invested knows that, you know, nobody's perfect. No. You're looking to have the odds slightly in your favor. Yeah. So, and that's what is great about this is so many times, like you said, when a stock is done, like, or, you know, gets tanked on, people still get emotionally attached to it, and they're like, I'm going to hold it. Yeah. I'm going to hold it hoping that it's going to come back, and hope isn't really a great strategy.
That's a big part about, you know, the alpha profit machine and the algorithm that it's based on, is that it's not just about making gains, it's also about avoiding losses. So I'm really glad you brought that up, because I pulled up 5 of our more recently closed trades. And so basically we got two sell alerts on the 15th of May. It was for a company called Ardmore Shipping Corporation and another one called 𝗧𝗶𝗺𝗀𝘀. And so we had these on in the portfolio. You know, they had performed all right, but basically the indicators had lined up saying like these guys are ready to be sold, and we've got 2 new stocks that, you know, have better momentum, have better indicators behind them. So we'll add those to the portfolio. So anyway, within like a week or two of selling those stocks, Ardmore dropped by 10% and 𝗧𝗶𝗺𝗀𝘀 dropped by 14%. So we avoided those 2 double-digit losses. It happened again on May 22nd. We got a sell alert for 𝗧𝗶𝗺𝗲𝗲. Within a couple of days, it dropped 15%. On June 20th, we sold 𝗶𝗺𝗀𝘀 Energy, which is like a South American energy company. It dropped 5% within a couple of days. And then most recently, actually this week, you know, this Monday, the markets were open on Monday. They were closed on Tuesday for the 4th of July. We got a sell notice on Monday. We dropped this stock, Wabash National Corporation, which is another like shipping corporation. And it's dropped 13% in the 2 days since. You know, so I mean, it keeps us from taking those big losses. It cuts out, you know, it cuts our losses, you know, when they're still small, and you know, when the momentum sort of shifts on a winner, it doesn't get emotional and say like, oh, but it did so well, you know, last week, maybe it'll do well. It's like, no, man, the indicators say it's not going to do well. Get it out of here.
Yeah, trust in the machine, trust in the process.
It works so well.
It's very, very difficult. Yeah. I know, you know, from trading stocks and you know, cryptos and stuff like that. It's like, oh, you see these big gains. You're like, oh, well, people so many times, oh, it's gone up. You know, why are you buying this stock? Because it's going up. Well, you know, it doesn't go up forever. So I don't want to
don't grow to the sky.
Right. I don't want to, you know, reveal too much of the secret sauce in there. But can you talk about some of the indicators that the machine looks at? Obviously, there's like you know, some like powerful sort of, we just talked about AI just being able to like crunch through stuff, and you know, just the computers, you know, even in the past 5 or 6 years have just gotten insane, the speeds.
It's really impressive what it can do. And honestly, you know, talking to, you know, other people who do quantitative trading and who use algorithms to help them pick stocks, my experience is not unique. Like there are a lot of people that are like, man, this thing just threw up the craziest trade I've ever seen.
Yeah.
But I've learned from experience not to argue with it, and it's because they've created the machine. We created the machine. We are the ones that that told it what to look for and told it what ranges to look in. And so I actually have a list of a bunch of the indicators that we use. And honestly, I could go through all of them, and like there's a lot more that sort of goes into it than just like clicking some boxes next to the indicators. You actually have to tell it like where to look in these. But we use the McClellan Summation Index. That's a market breadth index. It sort of shows the relationship between stocks that are advancing in an index versus stocks that are declining in an index.
Okay.
We look at different compositions of the indexes. So like the S&P 500 is a market cap weighted index, but you can also look at that in its equal weighted form, where every all stocks have make up 1/500th.
Yeah, and that's been a huge topic because something like I think 5 stocks in the S&P have
that's been
made
insane.
up most of the gains.
Yeah, and it's similar for the NASDAQ too. It's like 7 stocks in the NASDAQ. They were once called the FANG names, but now it's like FAAMNG plus Tesla and NVIDIA.
Right.
But basically, it's these 7 stocks that have really contributed something like 80% of the gains to the stock market this year. All of them have something to do with AI, typically, except maybe Tesla. But even Tesla sort of has that too.
And so it's interesting because you talk about the ChatGPT picking stocks and the AI, and how much of the machine is focusing on news-based stuff versus just the different technical indicators or
So for ours, we're really focused on the technical indicators.
Right.
We're focused on the stocks. We are focused on sort of macroeconomic things. So we'll look at, GDP and its relation to equities.
Okay.
Or,
so there is,
yield curves, credit markets, things like that. But we're not so much combing Twitter headlines to see how many people are excited about the stock.
Right. Well, you've seen how that can just get out of control in this meme stock era.
Oh, certainly.
You know what I mean?
Certainly.
For some reason, just something takes hold. So that just kind of goes to the emotion side of things too. You take the emotion out of it.
Positive comments on Wall Street bets on Reddit, then GameStop is still the best stock in the world, and should have outperformed everything, for the past 3 years.
Right.
So you sort of have to be careful with that stuff because those are those are trying to measure people's emotions. And there are algorithms out there. There are, AI programs out there that do scrape the headlines and they look for positive words and negative words and they try and judge what the investor, sentiment's going to be. But humans aren't rational. We're not rational beings. We're very emotional, and that's why this is so helpful because, I've definitely gotten attached to a stock. I'm like, wow, this has been my best investment ever. I don't want to sell it. And then, everything is telling me, maybe this has gotten ahead of itself. It's probably way too high. Are you willing to buy it at this price,
right,
or do you just want to see somebody else buy it at this price? And that's definitely bit me before. I try not to let any winners turn into losers. That's definitely something you should never let happen. If you've got a gain and you see it getting closer and closer to zero, sell it. Don't let it turn into a loss. But definitely we're emotional beings, and this helps take the emotion out of it. And so we try not to pay attention to the headlines and the emotionality of the headlines and things like that. We're looking at, short coverage ratios and market breadth indicators and, the yield curve and the bond market and how that's responding to different macroeconomic situations. We'll even look at the housing and the real estate market,
right,
commercial real estate. Looks like it's going to be in a pretty tough spot coming up, and the machine keeps pulling up charts to show me that, and to show me, how strained some of these regional banks would be if people start defaulting on those loans, because it's mostly regional banks that make those kind of loans to developers and things. And so, it shows this kind of stuff. It'll look at insider buying. It'll also look at long-term market trends where it'll go zoom back and it'll be like, okay, let's take the past 20 years. In this stock, in this index, in this sector, and see, what are the long-term trends there and things like that.
That's incredible because you think about, what just one person can do.
Oh yeah.
And like that's an entire team of just analysts that I'm sure these big banks have or whatever. But at the end of the day, you can't. You can only pick X number as an individual investor.
Yeah.
There's only so much data you can look at yourself and understand.
You run that risk of like they call it analysis paralysis,
right?
Where like there's just so much information out there that you get stuck looking at the information and you can't make a decision.
Right.
No, you're absolutely right. To put out, were it not for the assistance that I get from the AI, to put out the weekly email that I put out for this trading service, it would take me a team of probably, 25 super, super productive people, 100 average, analysts.
Yeah.
Like this is the kind of thing that, literally like it's allowing, me and like one or two other people to do the job of almost 100 folks.
Yeah.
It's really impressive.
Yeah. And that's not to say it's not cheap, because people think, oh, it's in the cloud. It's like, oh, it's just magical. Like doing like servers cost money, bandwidth costs money, data feeds cost money.
Well, and these programs are constantly evolving. We're fine tuning them, we're tweaking them.
Right.
And every year they get a little bit better because we have a little bit more data to work with.
Right.
And so like they can go back and look at the past, 30 years worth of data, but last year's data is even more valuable because we're seeing how the markets are reacting currently.
Right. And so you are every week a trade goes out on Monday. I shouldn't say always a trade goes out, but usually you're rebalancing.
Pretty often we're closing out one and adding another one.
Mm-hmm.
Like I said, I've never seen the portfolio down to 0 stocks. We usually have between 5 and 10, but 10's the max. And the idea there is basically, that you can start with, say, $10,000, put $1,000 into each of the 10 positions. And then when we sell one, you take that $1,000 plus the profits, roll it into the next one. And going back and back testing and, actually, like making those investments and back testing those investments, following this strategy, people were able to turn like $10,000 into $1 million in around a decade. So the power is really there. It's all about sticking to the strategy, not questioning the machine. That's something that I had to learn when we started going through it. But when you stick to the strategy, when you make the moves and you follow the prompts, you win more than you lose, and your winners are usually bigger than your losers too.
Yeah, and we're talking about, you said the average gain or the average hold time is 50 days for this year.
Yeah, for this year, we're at like 52 on our closed positions. My open positions right now, our average hold is 39 days. So, there's there's one that we just put on this Monday, so it's been on for 3 days. Our oldest position is 58 days old right now. We opened that one on the 8th of May.
So this isn't a service where you have to be on your computer 8 hours a day checking for a trade that's going to come in at 10:03 a.m. and if you don't buy it right then and there, the opportunity's gone and we're going to exit in 3 hours or the next day.
None of that. This is what you would call, so that's day trading. What you're describing there, that's day trading, where your holding period is a day or less usually with day trading. This is swing trading. So it's sort of like medium-term investing. It's not short-term. It's not long-term. It's like right in the middle. We'll hold our positions for as little as a week, as long as a few months. I've definitely there's been one or two that we've had on for like 4 or 5 months. I'm looking at one in 2022. We opened it in August. We closed it in December. But it kept going up, so we closed it for an 80% gain. So as long as the indicators that the machine looks for are still showing that this stock deserves to be in the buy category, then we're going to keep it in the portfolio. As soon as it flips and says nope, this is a sell trigger, then we cut it out. And we got a sell trigger on that one on the 19th of December. We sold it and we took an 80% profit on it. After holding it for 138 days.
Yeah. That's helpful because no one wants to be standing by the computer.
No,
like,
nobody has. I don't know. I don't know how people have time for that. To be completely honest, if you're not a proprietary trader at a hedge fund or like at a bank like Morgan, like where I used to work, and even those guys, they don't do it all day. That's the thing. They come in, the market opens at 9:30. By noon, they're out having lunch. Then they're hitting the gym, and then they're going to the bar because it's like super high stress, and you just can't do that all day. And I don't expect anybody to do that.
No, I couldn't go to lunch thinking, hey, maybe that stock's gonna tank by 20%.
Yeah, exactly. No, you close out everything, you go home for the day. They work half days there because it's very stressful, and that's a young man's game on the street too. You're talking about most of the oldest guys out there in their 30s.
Yeah.
We look ancient compared to them. Well, actually, I don't know because they're going through a lot of stress, so they might be aging a little bit quicker.
I'll tell you what. Yeah, that is not for me, and I think probably not for a lot of our readers. No. I mean, especially if you're retired, you don't want to
sit around watching for my email all week. No, I don't want anybody doing that. I don't expect anybody to do that. I can't imagine anybody really wants to do that. So this is great. On Mondays, that you're going to get an alert from me on Mondays. It's going to have any trades that the machine has given us, any buys, any sells, and it's also going to have, even if there aren't buys or sells, a huge market update with all of these different charts that the machine's kicking out of the different indicators that we look for. So sometimes it'll send me the NASDAQ's 𝗧𝗶𝗺𝗀𝘀 summation index, and it'll show me the relationship between advances and declines in that index.
I've read the updates. They're pretty in-depth updates. It's not just like, hey, the machine says buy XYZ. There's actually some component to it that is like, here's what we're looking at. Here's what because it's not just literally like, you feel like, oh, it's this black box where it's just you're just pressing a button, it's doing a bunch of stuff, and it out pops a ticker symbol.
Yep.
You can at least understand what it's going. Even if it's a little wonky, you can say, okay, let's do that.
And that's one of the reasons that I really like to include the market updates. We do this really cool thing. It is very specific to Alpha Profit Machine. I don't really know of any other AI trading firms or anything like that do it, but I call it our heat map. But it's basically a bell curve, and it shows sector strength, and it's got all of the sectors stacked, in a bell curve in between, with a relative strength indicator at the bottom. And basically, the further left it shifts, it's a bell curve. The more bearish the market's getting, the more oversold the market's getting. But I also call it a heat map because it comes up in red and blue. And if it's blue, that means that buyers are in control. If it's red, that means that sellers are in control. So we're looking at all of those different sectors so you can see, and everything's very visual. I feel like I've always said that, I haven't always said it, but other people have always said it, and I've always agreed with it, that a picture can be worth 1,000 words. It can be worth a lot more than 1,000 words. So that was one of the things that I was really adamant about with this, is that we get, there has to be visuals. There have to be visuals that people can look at, because me saying like, oh, the McClellan Summation Index on the NASDAQ just took a big drop today, and, the 5-month moving average and the 8-day moving average just crossed each other, and people are like, I go cross-eyed just like saying that. But if you can see that on a chart, it's really clear, and it really helps to sort of plan what's going on, say, with your other investments. I assume that people aren't just investing in the 10 stocks that I have in my model portfolio, that people have other investments out there, long-term investments, in their IRA and stuff like that, and their 401k. And so this is sort of a way, that I can show, like, this is what the machine sees for this week, know, and this is what I, after having worked in finance for so long, see from what the machine is telling me of what could happen going forward. And so we just sort of have this nice short-term roadmap that we can adjust, and we can sort of I hate the word pivot because everybody uses it so much, but we can sort of pivot. We can sort of change direction just a little bit, correct our course when something changes, because like you said at the beginning, you can't use old data because everything's changing, by the second.
Yeah, I mean, it's just, like you said, analysis paralysis. There's more and more data coming available every single day. There's new websites, new apps, new whatever going on,
new ratios.
Yeah.
People are always trying to create new ratios.
Yeah.
I'm always looking for like new different ways to combine financial data and sort of give a different indicator, give a new indicator. I'd love to have like the Jason indicator or something like that. That'd be pretty cool.
Well, you basically have it here with the Alpha Profit Machine. So how much is this service? Let's get down to brass tacks here. So because it's definitely not cheap compared to your flagship, the Wealth Advisor, which focuses on dividends.
Yep, the Wealth Advisor. I always like to say that it costs less than a dinner out, and now it's like less than a dinner out by yourself with how much everything costs now. So this is a little bit more expensive, but just to sort of like, I don't know. Grease the wheels a little bit here. This is the kind of thing. So in order to get access to a high frequency hedge fund, you have to have at least $1 million invested with the fund.
Yeah.
Usually more, right? Because those funds, it costs a lot of money, compliance costs, legal costs, all of those licensing fees and stuff. So it really doesn't make sense for a hedge fund to open if they don't have, I want to say, between $20 and $40 million under management. Yeah. So typically you need to put in at least $1 million, $2 million to get access to this kind of stuff. They're going to charge you the typical hedge fund fee structure.
The 2 and 20.
2 and 20. Everybody's heard that. That means 2% of the assets that they manage plus 20% of your profits. And I mean, if you've got $10 million in there, then your 2%. That's a lot of money.
Yeah, that is absolutely
and they get that
insane.
whether you make profits or not.
Right.
So that's how they make sure that they can keep the lights on, pay the bills and stuff, and then their bonuses come from that 20% of your profits that they're taking. I left Wall Street because I wanted to help people who needed my help, and charging like $200,000 a year and forcing you to invest $2 million with me just doesn't seem like
that's
that.
insane.
That's
and
helpful.
Then these guys are just when that's your fee structure, they are incentivized to not have what they call redemptions, right? Which is people pulling, the money out of the fund.
And they can ban redemptions.
Yeah,
they can say like you can't take your money out.
Yeah, that's insane. What kind of business model is this? Like I give you the money, and then you're collecting fees on that money, and then you make more if you make money for me, which I like. Obviously, I don't have a problem with that, but when you lose money, you still make money. It's like the old at Duke and Duke.
And when you try and take that money out, I could
be like,
actually, we're not going to do those this quarter.
Right. And that's how you get into the Madoff situation. Well, so you're sitting there and, Brian has a whole spiel about this, about how the money managers are just like, well, you need to just ride this out. And so it's insane what these guys are charging. And I would think the majority of our readers, our viewers, so subscribers aren't, forking over, $10 million to be managed by a hedge fund, So.
Yeah, and if you're not going to get this from a hedge fund, if you're going to buy access to the data you're talking about, I want to say like to get a Bloomberg feed, to get a Bloomberg terminal, that's last time I checked, which was a while ago, was like over $12,000 a year to get access to the Bloomberg data feeds.
And then you got to do all the analysis yourself,
and
you got to do for these models and stuff like that. Believe me, I have seen the bills come across my desk because I have to approve purchases over a certain amount, and there is monthly fees associated with this project that you have going.
Yep.
So it's certainly not cheap.
Yep, no. And I mean, you got to pay for the servers, you got to pay for the data. I am not a computer programmer, so I obviously had to have help from computer programmers to develop this. But like I said, it's a lot cheaper than doing it yourself. Than trying to get the access to a hedge fund. I mean, you're not going to get it unless you're a multimillionaire. Trying to buy it, you're talking about like $10,000-$20,000 probably a year to get access to something like this. And like I said, that's just not helpful to people who like really need it and who really need access to something like this. Those companies, those hedge funds are making more money for people who already have plenty. And I left Wall Street because I wanted to help people who didn't have enough money make more. And so I feel like right now we're charging about $2,000 a year for this.
Okay, yeah.
So pretty reasonable. I've definitely been told that I should raise the price, that 5,000 would be a deal.
Yeah, I thought you were going to say 5 or 10K. I mean,
eventually it probably will be 5 because everything's getting more expensive.
Yeah.
People talk about inflation's cooling, but that doesn't do anything to the inflation that we already experienced.
Yeah, it's not going. It's not negative. There's no deflation.
No, there's no deflation
going on
right now, and that's not going to happen for a long time. And honestly, if it does, we should be worried. Because deflation's a bad thing too. That means that there's a problem going on. But yeah, I saw an interesting chart just to put that into perspective. That there's a lot of media talking about a construction boom going on right now. It's a boom. It's the highest that it's been. It's higher than pre-pandemic. But if you actually adjust that for inflation, it's lower.
Right.
So the only reason that there's more money being spent on construction right now is because everything costs twice as much. So this will eventually most likely go up in price, but right now, we're charging that $2,000. Even at $5,000, people have told me that I should be charging 10 or 15 for this. And I don't ever want to have to get that high. And if I do, it's going to be because $10,000 or $15,000 just doesn't buy what it used to anymore.
Right. Yeah, that's totally reasonable for what you're getting here, and the amount of trades and just the cost that go on, and not to mention your expertise and 20 years of experience on Wall Street and all that. I mean, that seems like a no-brainer. And I think what we'll do is we'll put a link to join. If people want to check it out, they don't have to join, but if they want to check it out, a link in the description below, and they can sign up.
Definitely.
And I think there's probably a test drive option for a period of time.
I always like to give people sort of a risk-free trial period. You'll have at least a couple of months to try it out.
Yeah, stand behind it, and the retention rate on that is pretty high.
Really is. Honestly, I wouldn't offer it if I thought that if I thought that everybody was going to ask for their money back. But if you do, you try it out, you decide this isn't for you. Maybe you don't feel like checking the email once a week. You want more long-term stuff. You just call, and I'll refund every penny. You can keep everything that you got, all of the trades that you've made up until that point, all of the profits that you've made are yours, So I try and make it as risk-free as possible so that people have, very little to lose but a lot to gain.
Yeah, that's a no-brainer right there. All right. Well, sounds exciting, and appreciate you coming on today.
Yeah, I appreciate being here. Thank you for having me.
We'll talk to you next time.
All right, sounds good.
Later.
Nice.